Hello, welcome to European Open Briefing for Tuesday, October the 9th. I'm Rafi Barajan, currency analyst at XM.com, and we're going to be having a look at what's happening in the currency markets today. The yen has eased slightly this morning following those strong gains yesterday made on the back of that rise in risk aversion this week, which comes on those concerns about China's economic outlook, which the trade war between the US and China could start to be weighing on China's growth at some point in the coming year. There's also, of course, those concerns about Italy's budget, which look likely to be rejected by the European Commission. The dollar is also benefiting from safe haven demand against the yen, though the dollar did fall substantially yesterday. This morning, it's moving marginally higher around 113.30. It did briefly dip below the 113 level yesterday. The dollar index, though, is approaching last week's highs and currently is trading around 95.89. If you look at European currencies, we can see both the euro and sterling still struggling against the stronger US dollar. Of course, Italy's budget was weighing on the euro, and for sterling, we saw it coming under pressure yesterday as it's not looking likely that there's going to be a quick deal on Brexit between the UK and the EU, and those talks will likely drag on until that emergency summit being planned for November to finalize the Brexit talks. If we look at the risk-sensitive currencies, the Aussie and the Kiwi, they are slightly steadier this morning, though still weaker against the US dollar. Yesterday, both touched fresh 32 months lows. A firmer yuan is helping markets steady this morning. We can also see equities also moving in positive territory. We saw SSE Composite in China clawing just about higher, though the CSI 300 did end the day lower. Other Asian indices were mostly in the red, but we do have a positive start in Europe. Gold, though, is unable to benefit from that risk of sentiment. Yesterday, it fell to 1.5 week low as investors appear to be more interested in buying into US treasuries than the precious metal. Let's take a quick look at the big performers. We can see WTI crude making up for some of yesterday's losses. We can see currently WTI is up by 0.6% as we've got those looming sanctions on Iran nearing as we head towards November. Dollar Swiss franc is the next biggest gainer this morning, but at the bottom of the table we've got pound dollar and euro dollar being the best performer, the worst performers as we head into the European Open. Looking at the dollar yen pair now, we can see the pair has been drifting lower over the past week, though there's support from higher US Treasury yields. That mainly is benefiting the dollar index, which is moving back towards last week's high of 96.12. That was the highest in 6 weeks. And as US bond markets reopened today after yesterday's holiday, we're seeing the Treasury notes, the yield on Treasury note, 10-year notes, hitting a fresh 7-year high of 3.256%. But overall, markets are being weighed by doubts about the strength of China's economy, as well as what's going to happen with Italy's budget. If you look at the Australian dollar, which is seen as a good proxy for China-related trades, we can see yesterday Aussie dollar touched a 32-month low of 0.7039. It did pick up earlier this morning, helped a little bit by upbeat business confidence numbers out of Australia, but mainly that was the gains were on the back of a firmer Chinese yuan, which did see some gains earlier this morning, though it has since fallen back a little bit. So yesterday, dollar yuan hit an 8-week high of 6.9320. It's getting closer to reaching the 7 handle. If it does that, we could potentially see a bigger upset in emerging markets. And there was also comments by US Treasury official yesterday saying their concerns about the recent depreciation in the yuan, though China this morning reiterated that it's not planning on using yuan as a tool in the trade war with the US. So overall, though, although there's still some risk-off sentiment, the fact that Chinese stocks have managed to halt their slide and we're seeing some gains in other global equities, that's helping market sentiment improve a little bit. If you look at the euro, though, it's still struggling against the US dollar. Yesterday, it touched a 7-week low, 1.1457. Italy and the EU are heading towards a collision course as Italy's deputy prime minister has said that they're not planning on backtracking on their budget deficit targets for the next 3 years. So those plans will need to be submitted by October 15, but there are reports saying that the European Commission will likely reject Italy's budget, and that could lead to a much bigger fallout than from what we've seen already. Italy's Deputy Prime Minister Salvini also strongly criticized the European Commission President Jean-Claude Juncker and as well as the EU's Economics Commissioner, calling them as the enemies of Europe. In the meantime, we're seeing Italian government bond yields further widening their spread with German bonds, and that's what's mainly weighing on the euro at the moment. And finally, looking at what's coming up later on, it's going to be very quiet indeed. We just had German trade numbers released for falling slightly below expectations. In the North American session, the main data will just be Canadian housing starts. That's it from me. Thank you very much for watching and have a great day.